Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Today, we are going to look at what's going on around the world economically, starting with number one, China's slowdown. There are many factors at play here, and I want to show you what's going on. The second thing we are going to talk about is the trucking headwinds. With trucking, you see this right now potentially, as one institution suggests, in a recession. Okay. The third thing is Bitcoin's important correlation. What is that all about? What it means for the next 6 months, the next year, and so on. Let's get into all of that and more. Beginning with this, it's a Wall Street Journal article, and the title is Inside a Shanghai Mass Quarantine Center. No showers and lights on 24/7. Not too pleasant, to say the least. If I zoom in over here, you could see what it looks like for a lot of people. Bunch of hand sanitizer probably. You got a little cot to sleep on, and I don't know if that's a bedpan. I mean, what is that exactly? But anyway, not pleasant. So what are we here looking at? Essentially, that Shanghai is in a state of lockdown. The factories, the ports, everything had shut down. And then there has been this limited reopening as they get into the next level. And that's here. Shanghai unveils business restart plan on supply chain woes. If anybody's got to bring products out of China right now, particularly out of Shanghai, they know what's happening. 50 cities at one point. 50 cities in China means a lot of people. They had either limited or full lockdown. Now we are seeing what they're talking about with this opening up. Government tells businesses to make plans for resuming work. Financial center has been locked down for more than 3 weeks. They talk about what it is, as they say it's a closed loop. Closed loop. I'll show you. Businesses should formulate plans for closed loop management where workers live on site and are tested regularly. I'm not going to get into the. Anyway, I'm trying to watch my words carefully. The workers have to live at their job and just keep working because they can't go home, come back. Oh no, that would mean that they could potentially, pass this on and so on. They can't have that. So you, the individual, you don't stay home, you stay at work. Okay, and I just think let me know what you think. Put it in the comments down below. Let me know what you think. And if you appreciate this information, really, hit that thumbs up button. It's a simple thing that you can do to just help me out, as well as help to share this information out there. The lockdown in China's financial hub, now in its third week, has squeezed everything from consumer spending to logistics and production. So understand that this has a direct economic impact. It's not just about the political aspects here. Okay? Top officials have repeatedly warned about the risks to growth and the need for more monetary and fiscal stimulus. They are doing this. They are doing this. The data shows that, and I've given you this information before. Shanghai is a production base for many companies, including Tesla. Tesla is calling back its workers in the city to prepare for the initial resumption of production as soon as this week. So I'm going to give you updates on all of this if it is relevant in the coming days and weeks. So we will look at this, but understand that this is going to be a problem globally. China's central bank takes a modest easing path despite what's happening at this time. So they're reducing their reserve requirement ratio. So imagine how much money the banks have to keep. So that will determine how much they can loan out ultimately. And so when they've done this multiple times before, it's supposed to spur lending. In doing so, spur the economy, keep it growing, keep the businesses moving, keep, debt flowing essentially. But is it enough? We'll see. The modest action indicates restraint from the central bank in the face of interest rate hikes in the US and elsewhere and rising inflation risks. It also suggests that monetary policy easing may have limited effect in boosting growth when most of the pressures are coming from China's tough approach to combating what they're dealing with. Okay? Now, this just basically saying that they haven't gone full pedal to the metal. And we know that because globally it's the exact opposite. But they are still doing various actions. China raises coal and gas output to records after prices surge. Steel production shrinks. China is adding to a record amount of wind and solar this year. So they're pulling out all the stops. They're doing everything they can. And you see this right now. This country has a voracious appetite for commodities of all kinds, and they cannot fulfill their own desires. They have to import. And so we can see direct impacts locally right now in China. China boosted coal and gas output to record levels in March as the nation turned to its domestic producers for security of supply after international prices skyrocketed. Coal production increased 15%, natural gas rose 6.3%, crude output rose 3.9%. Okay? And they just go on and on. I think there was a chart in here, but yeah, there it is. Clean Colossus. China is set to add record wind and solar power capacity this year. And it's getting close to 150 gigawatts, which you just look at this on average year after year after year after year, adding to this. So we're going to see what happens in the coming days, but I think it's important to see the economic output of China, and we can then, kind of gauge where we are at with the economy as a whole. Right now, it looks like it is trying to dig itself out of a recession, or I guess prevent itself from getting into a recession. But if the whole world is going in that direction, good luck. All right. What about trucking? This is really key because when you look at freight of any kind, you start to see the patterns, you start to see how intertwined it is. Truck drivers are facing another bloodbath. This comes out of Freight Waves, and they say that a key trucking rate has tumbled by 37%. A lot of that has to do, I'll just say it up front, with availability of the vehicles. When the parts are not there, they can't repair them. They can't get them on the road. They can't get the drivers. Like there's so many different things that are happening all at the same time. And of course, that's going to impact the trucking industry as a whole. Okay. There's right here what they say. The indicators are worrisome. Demand for freight has undeniably slowed. And at Freight Waves, we believe a recession in trucking might be next. Wednesday, the much adored CAS Transportation Index report declared that the freight market is in a slowdown, though the index experts said it's too soon to declare a recession. So we're not there yet, but it's trending there. Banks like Cohen and Bank of America have recently downgraded trucking stocks in their own notes to investors. Dry van rates have tanked by 37% from December 31st. It's showing us on multiple levels, looking at this from multiple angles, that this is what's happening with freight today. Very interesting to say the least, isn't it? Let's look at Bitcoin. Bitcoin's risk-reward calculation is being upended by rising rates. This is something that I've talked about, I know, almost every single day. When you and I were talking on Clubhouse, I mentioned this. There was only a small handful of people. Clubhouse, my friends on Clubhouse, Chaz, we're talking about Bitcoin right here. Who else is out there who was on the Clubhouse chats? I mentioned it 100 times before. I mentioned it when we did the live YouTube videos. I was talking about this. Bitcoin and cryptos are considered to be a risk asset. The big worry is when, I was saying at the time, when interest rates would rise, because that was quite a while ago now. When interest rates would rise, we're going to have a problem with risk assets, and Bitcoin is one of them. Because there's so many people who were saying that Bitcoin would rise as the market fell. Bitcoin is a hedge against inflation. I don't know what's going to happen. I really don't. But at this time, we could see that this has been the case. Bitcoin's risk reward calculation is being upended by rising rates. Volume across major exchanges is the lowest level since August. What does that tell you? During that time, August to November started to get a little iffy. November officially, I mean, the market has just been chopping along. All different markets have been chopping basically since November, some earlier than that. Glassnode data suggests interest in Bitcoin has waned recently because they're not looking at these risk assets. They're saying, hey, where can I protect my money? That might change 3 months from now. But what do we know right here now today? A funny thing happened to Bitcoin as interest rates started to rise, trading volumes went way down. Now market watchers are grappling with the implications and what a world of less loose monetary policy means for digital assets. The aggregate 30-day moving average for Bitcoin is at its lowest level since August 2021. They have a chart in here. You can see that. Volumes are down because of the uncertainty. Investors seem to be worried that things could get worse before they get better. This has been declining, just showing us through 2021 up until the present. There's another one in here, I believe, further down. I actually opened that up here. Of a piece, correlation between Bitcoin and non-profitable tech firms remains strong. Very strong, in fact. So what does this mean? Non-profitable tech firms, Bitcoin, these are risk assets. And when you look at this, these are the first ones generally to be sold off when there is concern. That's just the way it is. And people should understand that because they're not going to sell their Apple stock before they sell their real risk assets. And so you see that generally seeing that highest volatility, but hey, that could reverse where your non-profitable tech stocks and your risk assets start to go up first in an uptrend, right? Look at this. Elon Musk, this article out of Bloomberg is talking about Elon Musk, talking about Twitter. But Jack Dorsey had this to say in a reply to another tweet, referring to the board of Twitter. Okay. Dorsey, who remains on the company's board until later this year, also took an unusual step of criticizing its managers on the platform. Quote, it's consistently been the dysfunction of the company. Well, that's pretty big to see the former CEO, the founder of this, to then criticize the board. He's still on it, right? Up until later this year, and then that's it. I just found it interesting to say the least. Maybe maybe we'll some more information. Maybe we'll reveal more about that in the coming days and weeks and months. It's just interesting to say the least. That's all. So I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you're supporting this channel. I appreciate that very much. If you're not subscribed already, you've got to hit that subscribe button. It's right down below, and I'll see you on the next one. Take care.